In this presentation, we will discuss tax-exempt status and federal regulations. Tax exemptions that are possible include things such as sales tax, property tax, excise tax, employment tax, and transfer tax. The nonprofit organization is going to have similar type of rules that are governing all types of business entities. So general laws for businesses, not-for-profits must follow as well, include things such as the Fair Labor Standards, Older Workers Benefit Protection, Equal Employment Opportunity, Disabilities Act, the Civil Rights Act, Drug-Free Workplace Laws, the Immigration Laws, Anti-Discrimination Laws, Harassment Laws, Veterans Protection, and Whistleblower Protection. We're not going to go into these in a lot of detail because, again, these are going to be the types of laws that are going to be needed to be followed, whether we are a not-for-profit type of organization or a normal type of business organization. Tax-exempt status. Even though an organization is generally granted tax-exempt status by a state, it still needs to apply to the IRS for tax-exempt status unless it is a religious organization such as churches, synagogues, temples, mosques, and auxiliaries of religious organizations, or any organization with normal gross receipts in a taxable year less than $5,000. The stated purpose of the not-for-profit organization, as well as the services the not-for-profit will perform, determine the Internal Revenue Code, the IRS section, where it requests exemption status. In other words, what the organization's purpose is going to drive what type of code it might fall under with regards to exemption status for the IRS. So you want to consider when you're thinking about setting up the not-for-profit organization, what type of code you're going to fall in under as you go through the setup process. The organizational test for tax-exempt status is that the Articles of Incorporation must limit the organization's purposes to those described in Section 501, cannot benefit private interests, and cannot attempt to influence legislation as a substantial part of its services. So first we'll take a look at the tax-exempt status under Section 501c3. So you can actually go to the IRS website, you can look up 501c3. If you refer to a type of nonprofit organization, they may be referred to as 501c or 501c3 type of organizations. Those would include charitable organizations, religious organizations, scientific organization, literary organizations, and education organizations. So it's a very common form of tax-exempt type of organization. This list all falling under the IRS Code Section 501c3. Public charities and private foundations versus public charities. The private foundations include Section 501c3 organizations unless excluded. They generally have support from a small number of donors and investment income, must file Form 990-PF, and are subject to excise tax. When considering the public charities, on the other hand, they must meet exclusion requirements, including the public support test and nature of mission, and they are not subject to excise taxes. Lobbying and political activities. Lobbying and political activity. A not-for-profit organization can be organized specifically as political parties, campaign committees, or political action committees. Most nonprofit organizations do not exist for political or lobbying purposes. So in other words, once again, most nonprofit organizations aren't there or don't have an existence for lobbying and political purposes, although there is an exception in that they can be set up specifically for these items: the political parties, the campaign committees, and the political action committees. So when you think about nonprofit organizations, you want to consider in your mind, is this a politically set up nonprofit organization in one of these three items, or some non-political type of nonprofit organization? If it's a not political nonprofit organization, they need to be careful about their political activities. So these nonprofit organizations need to be aware of what constitutes allowable and unallowable lobbying and political activity. So note there should be a distinction there. If we're not a political nonprofit organization, we need to be careful when venturing into a kind of political type of activities, because that's not the goal or the objective of the organization. In Section 527, political organizations, and again, this is an IRS code section, so you could look at this in the Internal Revenue Code, Section 527. Political action committees, PACs, political parties, campaign organizations, they need to meet organizational tests, and they have campaign finance reform requirements of needs to notify the IRS of Section 527 election. So when they elect under Section 527, needs to periodically report names and addresses of the donors. So note this is going to be a nonprofit organization that needs to be very transparent, and a political nonprofit organization, Section 527, which needs to be more transparent in some ways. So what if you are not a political entity or a political not-profit organization? What's going to be permitted and what's not going to be permitted with regards to political activity? So not permitted activity, participating in any political campaign on behalf of or in opposition to any candidate for public office. So the not-for-profit organization, which is not set up as a political entity, should not be participating in any political campaign, because again, that's not the objective of the not-for-profit type of organization if it's not set up specifically to do so. Limited type of action, so these are limited actions that could be political action. Again, not-for-profit needs to be careful of them, but may be able to participate in some limited action. Political expenditures, direct lobbying, grassroots lobbying. Form 990 Annual Reporting Requirements. Form 990 Annual Reporting Requirements for the not-for-profit organizations. Except for religious organizations and governmental NFPs, not-for-profit organizations, tax-exempt organizations have to file Form 990 annually. So this is going to be the annual reporting form. Now you might be saying, why do I have to file that with the IRS, given the fact that they're not going to pay any taxes possibly if they're going to be a tax-exempt type of organization? Information form still needs to be filed. And that's not too different, actually, than some other type of information forms that might be filed as well. For a pass-through entity, for example, like an S corporation, we still have to file the corporate return, even though the tax is going to be passed through to the individual return. So the IRS still wants to know what's going on, even if it's going to be a tax-free or tax-exempt type of entity. Form 990 needs to be made publicly available for 3 years. So it needs to be made publicly available. Again, transparency being a key component when we're considering not-for-profit type of organizations. This is something that's going to be part of a requirement to get the benefit of a tax-exempt information or tax-exempt status, and of course lends some trust then to the not-for-profit organization. Entities with gross receipts, normally $50,000 or less per year, can file Form 990N. So if it's $50,000 or less, 990N. Form 990EZ is filed by tax-exempt entities with annual gross receipts between $50,000 and $200,000 and with less than $500,000 total assets. Unrelated business income, UBI. Not-for-profit organizations may be assessed a tax on unrelated business income. The tax helps stop unfair competition between not-for-profit organizations and other small businesses. So you'll note, of course, if you set up a not-for-profit organization, many people, when you hear not-for-profit organization, you hear, oh, there's going to be a tax-exempt status. Wouldn't it be nice if you could set up some type of business organization and get a tax-exempt status? Because then, of course, you would have a competitive advantage to competitors, and you can make more money. You can have possibly higher profit margins. So you want to make sure the IRS wants to be careful that things that are set up for a not-for-profit organization, if they have a legitimate objective of a not-for-profit organization, then it should be set up, and it shouldn't be in direct competition with other type of businesses that are for-profit, given the public nature of the service that's generally going to be provided by the not-for-profit. That's going to be the general kind of idea of a not-for-profit. One of the reasons there's a not-for-profit type of organization is because they might be engaging in things, the types of things that the public needs, but which there's not as much of a for-profit type of incentive. The market, in other words, doesn't typically take care of that need. Therefore, you need the incentivization for the not-for-profit organization. However, if the not-for-profit organization ventures out away from their primary objective and does some type of activities that's more like a for-profit type of activity, then in essence, they could be in a situation where they're competing with for-profit organizations, and that's not the goal of setting up the not-for-profit organization. So we don't want to have an unfair playing field where people have an incentive, in other words, to set up a not-for-profit organization, try to do for-profit type of activities, have a competitive advantage and kind of cheat the system in some ways against other people who have a legitimate for-profit organization in that same type of thing. So the tax helps to stop unfair competition between not-for-profits and other small businesses. Unrelated business income is gross income from an unrelated trade or business engaged in on a regular basis minus directly connected expenses, which is in essence the net income of that type of activity that is happening, certain net operating losses, and qualified charitable contributions. Activities will be considered unrelated unless they make an important contribution to the accomplishment of the organization's exempt status. So again, you might think, well, what is unrelated business income? Activities will be considered unrelated business income, which could be subject to taxation, unless they make an important contribution to the accomplishments of the organization's exempt purpose. So obviously, if they're contributing to the exempt purpose, then you would think that it would not be an unrelated business type of activity. It would be one of the primary activities, those primary activities having to qualify under some code section in order to qualify for the exemption status. Income considered unrelated business income, UBI, include income passed from a feeder organization to a not-for-profit organization in the form of interest, rents, royalties, and annuities. So in other words, if we set up some kind of pass-through type of system where the income is going from some other type of organization into the not-for-profit organization, that would typically be considered unrelated business income subject to taxation. Income that would also be considered unrelated business income includes income from an asset that is mortgaged or debt-financed income. So, for example, rental of real estate where the not-for-profit organization holds a mortgage. Excessive benefits to officers would include unreasonable compensation, sale of assets at bargain prices, and lease arrangements. This is going to be an important consideration when you think about setting up a not-for-profit organization and when you consider donating to a not-for-profit organization. Because although when you consider the profits of the organization, those profits are not going to, in essence, the owners of the organization as they would for a business. In other words, if we set up a business, a corporation, we would have the profit of the business, which could then be distributed to the owners. So we would make revenue. Any revenue that is generated at some point in time could be distributed to the owner in the form of dividends. In a not-for-profit organization, that's not generally the case because the goal is for all that profit to then go back into the business in order to serve the good, the public interest for which the not-for-profit was set up in order to do. However, if someone was going to set up a not-for-profit organization and then the employees of the not-for-profit organization are still benefiting, so they may not be the owners of the not-for-profit organization, but they're making a living from the not-for-profit organization. So it's quite possible for the compensation of the people within the organization, especially if, of course, the top officers of the organization, to have high compensation, and you want to make sure that the compensation is reasonable. This is going to be a big topic for not-for-profit organizations as well, because when you consider people that run a not-for-profit organization and compare what they do to, say, people that run business type of organizations of a similar size, you can consider the type of salaries that are given to like CEOs, which are often considered to be quite high in comparison to the average salaries. And if you think of the not-for-profit organization, people argue that if you want it to be run well, then that you should have pretty competitive competition standards for the top owners or the people that are running the type of organization. But again, you want to be careful you want to consider what is the compensation for the people running the organization. When you donate to the organization and you set up the organization, the goal is to streamline the organization, make it efficient, which means you do need to pay people well to make it efficient, but also to make it so the money is obviously going towards the organization, the efficiency, so the organization will achieve the goal. So most of the money will be going towards the goals that are being achieved. So when you look at an organization, you might want to consider how much of the money is going to things like compensation of people like officers, and how much of the money is going to the actual goal, the objective, which is what the organization was set up to do.